Welcome to this special Halloween edition of the Crypto Market Update. While Bitcoin might be feeling spooky with its recent pullback, don't let the market haunt you. We've got all the insights to help you navigate today's price action. Here's what's coming up in today's exciting episode. Market overview. We're going to break down Bitcoin's pullback and the US market's impact, plus the latest on stablecoin, Bitcoin, Ethereum, and altcoin dominance statistics. We're going to cover Bitcoin ETF flows. With nearly $1 billion in inflows over the past 2 days, we're going to discuss how this is setting up the crypto landscape. Then we're going to take a look at our two popular trading strategies, the Minx and time transformation volatility strategy. They have been on fire this week. We'll dive into the latest short signals for Bitcoin, Ethereum, and Solana, as well as volatility trends. Also, we're going to look at some insights from Arthur Hayes. He's going to talk about the bullish views on China's economic stimulus for Bitcoin. We'll also touch on Chris Dunn's trading strategies and why Solana's on-chain analysis is less optimistic than its technicals, plus a breaking election scandal in the United States blowing up in Colorado. We're going to cover that as well. We're going to cover market sentiment. So we got a pretty packed lineup. So settle in as we dive into these updates. No tricks, just treats for your crypto knowledge. Let's get cracking. Starting off, oh, hey, what do you know about that? Starting off, as we are wont to do, with Bitcoin on the daily time frame. All right. So following yesterday's indecision candle, Bitcoin pulled back today, and the sell-off began just as the US stock market opened up this morning. All right, we'll cover this in just a little bit. Let's check in with our market stats. All right, we do currently see that Bitcoin dominance is sitting at 60%. Let's get the data window open. All right, so Bitcoin dominance dropped from 60.07 yesterday to 60.05 today. Ethereum dominance currently sitting at 13%. That is a drop from 13.44% yesterday. Looking at Solana dominance, it's currently sitting at 3.44%. That is a drop from yesterday of 3.45%. We can just see the trends here, all right? Look at altcoin dominance continuing to drop. Altcoin dominance today sitting at 15.98%. Yesterday was at 16.11. And of course, where has that money gone to? We see stablecoin dominance rising. Stablecoin dominance currently at 7.13% of the market. Yesterday, that was 6.92. So we do see altcoins and Ethereum being hit the hardest. Meanwhile, even though Bitcoin's price has pulled back, money still flowed in. Ethereum is shedding market share, but with Ethereum 55% away from its all-time high and us really on the cusp of a potential massive breakout into the parabolic euphoria phase of the market over the next 6 months. And we're going to cover this, why Ethereum is much, much stronger than the chart suggests later on in the show. Ethereum is a strong, strong dark horse for me right now. All right, let's look at our ETF inflows. Okay. All right, so our Bitcoin ETF inflows have been super robust. The last 2 days, look at this. The last 2 days have recorded the largest inflows on record since June. All right, the last 2 days, largest inflows since June. Yesterday, nearly $1 billion in inflows. And look at volume. Look at the volume trend. Volume is picking up in the ETF inflows. So spot is hungry. Anyone out there saying that this is a futures move and spot is fading this, I don't have any idea what in God's name they're looking at. All right, let's go to the footprint chart. Let's get sexy with it. All right, let's zoom out here a little bit. So obviously Bitcoin, this is the 30-minute time frame on the footprint chart. We can see that Bitcoin did sell off here from its $72,000 range. We had quite a bit of tightening of volatility. We'll see that on the charts here in just a little bit. But as we sold off, we came down here and cleared this cluster of bid and ask imbalances that had been hanging over the sell imbalances from unfortunate shorters trying to sell the bottom of the market right here. Not the bottom of the market, but the bottom of the movement before that kind of last upthrust to reach that high of almost $74,000. But we have cleared those imbalances, and now we are just kind of very much slowing down. We are no longer really dumping. We are very much just chilling, consolidating. As we can see, we do have bid imbalances down below us, starting around the 69,900 and 69,500 level. And those, of course, do stretch down quite a bit. We've got a bunch of bid imbalances from individuals that were just massively market buying as price was going up, as you should. So we basically cleared all of those levels. If we look at large limit orders, Let's look at large limit orders. We can see that we've actually cleared most of the significant large limit orders. So people were dip buying. We do have some massive bids right here around the 1 million, 6 million, 7 million. And we can see that they really start to thin out. All right. Of course, yeah, of course, the bids are stacked. Large limit orders are stacked all the way down to 50,000. So the demand is there. People are looking to buy Bitcoin on this pullback. And we have filled the most critical and largest orders closest to us. All right. Let's look at our liquidation levels. All right, let's look at our liquidation levels. As we can see, we have taken out most of the, almost all of the high, and now most of the medium leveraged long positions on this last Bitcoin slide down. As you can see, we still have this liquidation cluster right here that we're probably going to tease around and test around for a little bit. This is also a reason to be cautious. Generally, as a trader, when I see something like this, when I see that price has pushed down, cleared out high leverage longs, and cleared out mid leverage longs, okay, that's great. And then usually we'll kind of bob and weave here. This is what really gets the day traders, the short-term time traders on the 1 minute, 3 minute, 5 minute chart. This is usually where they get slaughtered right here in this area of the market, because they keep, taking big bets and having tight stops. And they don't understand that if the market's going to make a big move, they're going to clear all that liquidity. All right. The smart traders are going to grab all those positions. They are going to try to push you out of your position. That's why, guys, listen, 10x, 20x leverage. All right. 50x leverage. What are you doing? I don't understand it. I don't understand. Anyways. All right. So we do have this liquidation cluster right here. So for the bulls out there, we would like to see probably some more wicks down into this area, grabbing as much liquidity. We can see one nasty wick right here, scam wick. So I'd like to see 2 or 3 more of those, and then a breakout above 70,000 if we are going to continue the impulse movement right away. On the other hand, this is something to be aware of. If we see these levels get cleared, if these liquidations get cleared, that can cause a cascade, and we can start descending down. The next level's around 69,500. The next level's around 69,000. The next level's around 68,500. All right. So, and we can see that these liquidation levels right here. So basically, if price stops here, it would be absolutely natural. This is just a nice orderly pullback. All right. We've cleared out most of the high risk, high leverage longs that of people who bought the top. All right. But everybody who bought in this area of the market, all their liquidations are right around here. So pulling back here, if we do end up crashing these liquidations, causing a cascade and starting to sell off more, that does become a bit of a concern. We do have to start looking at a more pronounced pullback, something of that nature. All right. All right. Let's go to our Mink strategy review. All right, Mink strategy review. We'll start off with Bitcoin. All right, this is our Mink's trading system. As of today, we have our 60 Hall baseline here. We also have Mink's program to our 60 Hall baseline. All right, as we can see, we do have a short signal that comes in at about 7 a.m. Eastern. I came out at 7 a.m. Eastern. Price is below the baseline. Everything's good. Volatility agrees. So taking that short position, and on our current candle that we're experiencing right now, we are actually getting that take profit short signal. So Mink's doing a fantastic job right there. We look at Ethereum. I mean, Mink's traded Ethereum beautifully. So we got our initial short signal. Let's see here. Yesterday at about 1 p.m. Eastern time, getting us in the initial short position. We get another continuation signal at 2000 Eastern time. We get another continuation short signal at 2300. We get another one at 8 a.m. in the morning today. So all continuation signals, and Mink's is still calling for this position to be held open. No take profit short signal on that yet whatsoever. And on Solana got whiffed. Mink's did not do good on Solana today. We can see we got chopped up. Now, these aren't actually trades that you likely would have taken with your volatility filter, because it will screen these trades out, but didn't actually get you a good short signal for the impulsive movement down. All right, so Mink's on fire with Bitcoin and Ethereum today. As far as our time transformation volatility strategy, same time frame, looking here at Bitcoin. All right. We have low volatility that starts coming in between 4 a.m. and between 4 a.m. and between 7 a.m. All right. At 6 a.m. Eastern time, we actually get the time transformation cross under after low volatility. Price starts moving down. I've drawn this blue box around the entry zone where you would get a signal triggered. So we're going short around this area. And here we go. Time transformation calls for the close signal. So that was a great trade. So what did we get? We got about 2% on that particular trade right there with BTC. Looking at Ethereum. So Ethereum, we probably wouldn't taken. So I'll highlight, of course, this same low volatility area. But if we compare this level of low volatility right here with the level of low volatility that we had on Bitcoin, we can see that it's not really a comparison, right? That level was kind of like up here, more mid-range. So honestly, I wouldn't have discretionarily taken a trade on Ethereum, even with that level right there. Of course, great movement from Ethereum, but time transformation keeping you out of that position. We do have a high volatility warning right now, though. So time to be closing positions or taking reversal positions is usually the way to play. However, Solana, chef's kiss with the time transformation system. So I've drawn the blue box around, we can see we have 2 periods of critical low volatility right here. And then we have critical low volatility right here. Potentially you get suckered into the long right here, all right, which is totally fine because we are above the EMA 200. So potentially you're in the long, but it's just a few candles later where it's getting you immediately out of that short and into the position right now, because we do get that bearish cross under an invalidation of that long signal. You're entering here, you're exiting here. Basically a break-even trade, but you're getting into the short here and you're still in that position. We don't have critical volatility. We don't have a take profit signal yet from time transformation. So again, just great trade on Solana and on Bitcoin. Both Minx and time transformation, these are all indicators available to everybody in the Crypto Trading Academy. Our exclusive indicator suite is available to all of our clients. Guys, if you're looking for an exchange with 0% spot trading fees, an incredible futures trading experience with both USDT and coin margin contracts, no KYC or VPN requirements for North American users, and a great setup for building strategic portfolios, check out BYDFi. You can use my link in the description to trade with me, support my content, and receive great VIP perks. All right, on to the scuttlebutt of the day, starting off with the Bitcoin Yardstick indicator from Charles Edwards of Capriol Investments. Again, one of the greatest indicator creators out there and some of the best on-chain and fundamental analysis of Bitcoin that you are going to find. Power law corridor, the hash rate, just come on, guys. All right, so he tweeted today that the Bitcoin Yardstick today at 72,000, current price of Bitcoin, is priced the same as Bitcoin at 1,700 in 2017 and 13,000 in 2020. So taking a look at the charts, we can just see that the Bitcoin Yardstick is giving the same level as it was at prior in the 2 previous cycles before we entered the euphoric parabolic phase of the market. All right, so here it was in 2017. Here it was in 2020, and both times we had amazing punctuated equilibrium entering that euphoria phase of the market, and we're at that same level right now. Basically, for those of you who aren't familiar with the Bitcoin Yardstick indicator, this indicator measures the ratio of hash rate, which is used to secure the network, in relationship to Bitcoin's market capitalization. As Tams points out in a comment later on in this thread, it's similar to a PE ratio for a stock. So what that means, we are poised for a similar breakout like 2017 and 2020 if demand for Bitcoin stays consistent. And taking a look at those Bitcoin ETF inflow numbers, I would say, yeah, come on. All right, next up, Hyblock Capital tweeting this morning that only 38% of positions, of accounts with positions on Bitcoin are long. All right, taking a look at this chart, only 38%. Which way do you think the market is likely going to move? All right. Okay, breaking now, we have a massive election fraud scandal unfolding in the state of Colorado. All of this will be linked down in the description, and this is a video. There's not much here to read, except an allegation against the Colorado Secretary of State, Jenna Griswold. But I highly recommend you go watch this video. It's about 9 minutes long, and it's ridiculous what's going on over there. In summary, all right, the BIOS passwords for the Dominion voting machines in Colorado were all leaked. All right, 660 some passwords to access the BIOS of all the Dominion voting systems were released, and this affects 63 of the 64 counties in Colorado. If I have that right, please fact check me if there's 65, 62, if I have that number wrong. But this is massive. And the secretary, this happened last week. The Secretary of State was aware of this information as early as last Thursday. And it wasn't until yesterday or the day before that she actually communicated with all of the, I'm not sure what the exact term is, but the individuals in each county who are responsible for essentially counting the votes and handling everything. And this is because with these Dominion voting systems, you have a centralized server, and at the election points where you actually go vote, you're basically just voting on a tablet. And the inputs that you put on that tablet get transmitted to the centralized server. Same thing if you mail in a ballot. They have a scanner. The scanner scans the mail-in ballot, the written ballot, and that information also goes to the centralized server. And the BIOS password, which will give you access to change anything you want in the firmware, have now been leaked and been so for a week. And apparently, the Secretary of State of Colorado, Jenna Griswold, it's like, oh, it's no problem. It's fine. There's no way anybody could have accessed it. You can't remotely access these machines. Yes, you can. Yes, you absolutely can. So listen, it's crazy to me the amount of just craziness that's going on in the United States right now. But definitely go, big shout out to Patrick Byrne for reporting on this. Definitely go check this out. All right. Now we're going to talk about Solana TVL. We've got a long post here from Michael Nadeau of the DeFi Report. And basically, what I'm going to summarize this for you, because the argument has been, and we're going to go down and look at basically the picture of top 15 net flows. All right, looking at chains, layer 1 and layer 2 chains, and looking at TVL as it has flown across the chain. And what we can actually see here, it seems that everybody is talking about like, oh, Ethereum's so weak, the price is down. And, look at Solana. And the narrative is that Solana has taken all this TVL from Ethereum, but that's not the case. All right. We actually need to look past the simple charts that people are posting and look at a little bit more data with some context. All right. So Solana's TVL flow offers insights into its position relative to other blockchains. Over the last month, we can see that, over the last month, Base has led in net inflows with $463 million worth of inflows, followed by Solana at $197 million and the Sui network at $120 million. But so that's just last month. Year to date, we can see that Arbitrum at 2.4 billion, Optimism at 2.2 billion, and Base at 1.6 billion have attracted the most net flows, far surpassing Solana. Solana is not the king of TVL, all right? It's Arbitrum, OP mainnet, and Base, which guess what? Hold on, Ethereum. However, the key metric for Solana's growth, all right, what everybody's talking about is this idea that it is pulling TVL from Ethereum and its layer 2s, where most of the ecosystem's value lies. But the data shows that this shift is extremely minor, all right? Solana has gained, if you only look at the raw numbers, you would see that Solana has gained 2.36 billion from Ethereum. But over 1 billion of that, 42% of that, flowed back to Ethereum. Only 2.7% of Ethereum's TVL has actually gone to Solana this year and stayed. Only 2.7%, an extremely modest share. All right. Now, as we can see here, Ethereum has seen $6 billion in net outflows year to date. But 83% of that has remained within its layer 2 ecosystems, which maintains value within the Ethereum network. All right. Ultimately, 82% of value that left Ethereum returned to it. All right. This underscores its hold as the most secure and decentralized layer 1, and certainly the most valuable. By the way, all of this information is provided by Artemis XYZ. Big shout outs to Artemis for providing this data. And again, this article will be linked if you want to go read a little bit more in detail and check out the comments, see the arguments about this, go check this out. But the idea that Ethereum is dead, all right, certainly its price is down, but I think that's largely contributable to the burn and print cycle, the burn and mint cycle. And the other thing too is, I mean, if you really just look at where all the TVL is, it's really still on Ethereum. All right. So Solana is cool. I'm not dissing Solana, but people are just really getting over their skis about this. All right. All right. Arthur Hayes, cool article that he posted. All right, I read this morning. Title of this from the Daily Hodl. Arthur Hayes says new Chinese monetary chemo will send Bitcoin soaring. Here's his outlook. So Arthur Hayes, of course, he's the former BitMEX CEO. He believes that China's new monetary policy, which is aimed at combating economic deflation, will significantly boost Bitcoin's value. The Bitcoin holders will be the true recipients of this. Of course, China citizens will benefit as well. So he likened the policy to something like monetary chemo, which is intended to stimulate China's economy. And the way they're going to do that is by injecting a substantial amount of yuan liquidity. All right. Now, the suggestion he makes is that this influx of new fiat, he said, doesn't matter, who's what fiat anybody's printing, but any government that's going to print fiat and particularly the Chinese economic plan, he suggests that this is going to match the scale of the United States COVID-19 relief efforts, the amount of money printing that we saw in the United States during COVID-19, all right, which would set the stage for a strong Bitcoin rally. Now, obviously, initially, that money is, of course, going to benefit Chinese assets, all right, but the broader effects will ultimately drive demand for Bitcoin, all right, so ultimately drive demand for Bitcoin. This is good stuff, all right, so oh, sorry, I got this. Yep. Okay. All right. Next, we got a nice post. Oh, why do I get that wrong? Sorry, guys. All right. Next, we got a nice post from hoeem on 5 tips. The way I'm reading this, 5 tips to keep rich in the bull market. All right. The title of this is 5 pieces of advice to avoid ruin after 4 years in crypto. All right. Based on his 4 years of experience. Great thread. Definitely go read this. But I'm going to summarize this for you. So number 1, don't lock up your assets. All right. So he says during the bull market, he locked up $10,000, all right, into a, something with an attractive yield. And that investment grew to $350,000, but it was locked. And now it's still locked, by the way, and it's worth only $1,900, all right, because it's inaccessible. All right. So flexibility is crucial. All right. Do not lock your investments up during a bull run because you never know when the rug's going to get pulled out from us. And you want to be able to have liquid assets. Liquidity is king. Always keep liquid assets, period. All right. Tip number 2, smart profit taking. All right. He says, yes, make sure that you are realizing those paper profits on the way up, but don't make the mistake of selling everything at once. All right. Average out, no matter how afraid you might be, no matter how dire it may seem. Again, the market is never just dumped, like completely lost the bull market in a week. It's a slow process. Okay. And sometimes it pulls back and jumps and pulls back and jumps. And you're never going to know because you can't predict the future. All right. He talks about how he's seen assets that he sold because he thought it was the top, then 10x. All right. So he recommends holding on to a portion to capture any potential gains. All right. Number 3, when you're interacting in DeFi or in crypto in general, only use official links. All right. Only use official source links for decentralized applications and bookmark them to avoid scams. Never rely on search engines for links. Never, ever, ever. All right. If you want to find, some decentralized platform, go to Twitter, find their official Twitter and click and find their link tree and click through there. Do not type it into Google because a high probability that scammers have promoted their post to the top. It's going to look just like the same thing. Next thing you know, your wallet's drained. All right. Number 4, beware of influencers. No, beware of influencers. For real, guys. The bull market attracts hype. All right. So avoid blindly following charismatic personalities, or confident personalities. Stay skeptical. All right. That is a real superpower in this market. Staying skeptical. All right. Staying skeptical can really help you avoid some bad mistakes. All right. So just beware of blindly following anybody's investment advice, coin recommendations, portfolio. Make your own decisions and remain skeptical of things that seem too good to be true. All right. And finally, regularly revoke permissions. Okay. This is something I've been talking about for a long time. This is something I regularly do with tools like Revoke Cash. And honestly, wallets like Rabby are great at this too, but maintain your security. Revoke permissions on platforms you've engaged with. All right. That you're no longer engaging with. All right. Do this regularly, like once a month, once a week, depending on how active you are. So tools like Revoke.cash and wallets like Rabby make this very easy to do. All right. So following these lessons, great advice from hoeem, allows you to protect your assets and keeps you flexible and secure in this space. So shout outs to him for this great post. All right. Then we've got a great post from the man, the myth, the legend of phantom renown, Cronje. All right. So I'm going to read his tweet. And he says, after a few years in tech, I found a weird pattern. Not sure if it's just me or other devs as well. If it's someone else's idea, my execution is great. If it's my idea, my execution is trash. Does being overly focused on the idea tilt execution and vice versa? And then he says, bottom line, always have co-founders, I guess. And I mean, this is just wonderful, right? This is such a deeper thing that I talk about a lot, that I feel a lot. It's so easy to listen to someone complain about their problems and just boom, boom, boom. Oh, I got the solutions and I could execute on them, no problem. But how good are we at identifying and solving or executing on solving our own problems? All right. So this is a common challenge, not just among developers and creators, but among humans. All right. Often when we have our own idea or our own problem to deal with, we get too wrapped up in it. all right, which leads to overthinking or perfectionism, and that can really bog down our execution. This is especially true if you're being creative and trying to create something. You get wrapped up in what it could be, its infinite potential, but you don't actually put anything on paper. All right. On the other hand, when you're working on someone else's idea, it really allows you to just not be so married to it and focus on the problem solving and the implementation, boots on the ground, without the same emotional attachment. All right. And this also would point to why so many successful businesses, ventures, projects thrive when there's co-founders or collaboration. All right. Because you have to have different balancing perspectives to help streamline the getting it actually done. All right. And keeping everybody grounded. All right, so definitely an interesting and very, close to home observation from Andre here. And I hope that his next tweet is promoting his next 50x coin. Let's go, Andre. Come on. All right, we're going to close today from the great Chris Dunn. A great tweet here, basically, summarizing how he finds and manages profitable trades. This is straightforward. This is effective. This is, again, not exactly what I do, but I'm not far off, to be quite honest with you. He starts by assessing what's the big trend, or what are the key things happening in the market right now? What are the important things that I need to focus on, and use those as anchors to dictate my situation. All right. So once you do that, once you understand the key narratives and the trends that you're focusing on, are we in a bull market? Are we in a bear market? Are we sideways? Are there catalysts coming up? Understanding kind of the calendar and the landscape is the first step. And after you've done that and found something interesting, you want to identify significant price areas that could drive larger moves, resistance, support, pattern, something of that nature. Then going down to the daily time frame, he looks for a rules-based trade setup. All right. If he sees one, he creates a clear plan with his risk levels, i.e. where he wants to get out, profit targets, and position sizing. All right. Then he goes down a little bit further, goes into intraday price action to find an entry, and then he lets the trade play out. And there's only 3 possible outcomes. The trade hits the take profit, the trade hits the risk zone, or he takes what he calls I love this. He takes it a graceful exit based on new information. Like, okay, no, we didn't hit the take profit, but we didn't hit the stop loss, but interest rates just got jacked by 5%. So I'm pretty sure the market's going to dump. This is new information that I did not have at the beginning of the trade, and I'm out. See, this is a beautiful level of nuance that I want to focus on. Well, obviously everything he lays out there is a disciplined step-by-step approach. This is super simple in structure, but that last part I want to focus on, this idea of a graceful exit, as he calls it, a graceful exit. This idea that, often this is a very interesting. We become too rigid in our okay, no, just entry and exit and that's it. But the thing is, you have to be open to new information. If critical information comes to your attention while a trade is open that you think is going to have a significant impact, that maybe you have some data on that has historically had a significant impact before, then that is new information that you did not know at the beginning of the trade. You had incomplete information at the beginning of the trade. So something very interesting to take into account and think about as you're creating your own trading strategies. All right, guys, thank you for watching all the way to the end of today's crypto market update. Make sure to join our free Discord Make sure to join our free Discord to stay connected. And if you are ready to stop gambling and start trading with a real profitable strategy, join our Crypto Trading Academy. You'll receive access to my in-depth courses on how to build profitable technical strategies from the ground up, all of my exclusive analysis and signals, portfolio updates, weekly mentoring sessions, and much, much more. Check the link in the description, and I will see you on the other side. Until tomorrow, trade safely and stay deadly.